Hey, good morning, everybody. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. But before we start, as a friend of mine frequently asks, if I was stranded on a desert island, what would I need? Well, I'd need three pieces of software: highgrowthinvestors.com, freestockcharts.com, and MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, I would need highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Stocks staged a massive reversal on Friday on their way to a confirmed uptrend. For the day, the Nasdaq advanced 1.7%, the S&P 500 1.4%, the IBD 50 and the IBD 85 were both up significantly less. Trading volume was heavier than Thursday's levels. For the week, the Nasdaq Composite was up 0.45%, the S&P 500 slightly more than 1%. Meanwhile, both the IBD 50 and the 85 were down for the week. The IBD indices are continually updated to reflect leading momentum stocks and give us an idea of what the market leadership is doing. Currently, that leadership appears conflicted and directionless. Certainly not the type of activity we would expect from momentum leaders in a confirmed uptrend. But a confirmed uptrend is what we have by virtue of the fact that the S&P 500 on the fourth day of the attempted rally advanced 1.4% on heavier trading volume than the prior day. This is a definition of a follow-through day, which ushers in the confirmed uptrend. Advancing issues bettered decliners by 3-1 Friday. The New York Stock Exchange advanced decline line continues to look a bit less bearish, as it never undercut its August 24th low. New lows continued to better new highs. Large capitalization stocks outperformed small again yesterday, but small caps continued to slightly outperform on a 10-day moving average basis. Small caps outperforming is behavior more typical of a bull market, but the trend recently has been toward outperformance by large caps, indicating the bulls should proceed cautiously here. The Russell 2000, which undercut its August 24th low last week, recaptured that level, which is encouraging to the bulls. Our market timing model for both the S&P and the Nasdaq are indicating a primary sell signal with a secondary indication of aggressive buy. What this means is that most of us should continue to hold cash, while our most aggressive traders can begin to carefully dabble back into the market on the long side, keeping stops at their tightest levels. As noted earlier, the O'Neill timing model gave us a follow-through day on Friday, so we're now in a confirmed uptrend according to O'Neill. Our market timing model and O'Neill seem to be at odds for now. Personally, I'm a faithful follower of William O'Neill. Almost all of our strategies, including our market timing model, are derived in some manner or form from his writings and experience. I wouldn't blame traders for getting more bullish here based on O'Neill, but keep in mind, this is a squirrely market prone to significant whipsaws. Our market timing model on both the S&P and the Nasdaq are still on primary sell signals. If you're going to go long in this market, I suggest that you keep your stops at their tightest levels, at least until we take out the highs of September 17th, as I'll explain in the chart analysis that follows. In the meantime, you probably won't get hurt too badly remaining in cash. Be careful. Okay, we're going to do things a little differently today. Rather than look at where the strength is in the industry groups, we're going to back into the industry groups by looking at where the strength is in stocks today. In order to do that, we're going to take a look at our spectrum analyzer. So, what you're looking at here is the HGSI High Growth Stock Investors universe of 8,000 stocks sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort. The reason that we do this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So let's plug these stocks into our spectrum analyzer and see where the strength in the market is. This is our spectrum analyzer, and what it does is it takes the top 100 stocks in our sort and divides them by industry group. We can see that we have 18 real estate investment trusts in the top 100, 7 consumer finance stocks, 7 refining and marketing stocks, 5 IT service stocks, and rounding out the top 5, we have 5 automotive stocks, also 5 airline stocks. This is where the power in the market seems to be moving to on the day that the market confirmed our uptrend. Let's take a quick look at the Russell 2000. We've been watching this area of support in the Russell 2000 in the 1102 range. The reason we've been watching that is that was the low on September 26th. We undercut that low last week, right in this area, and then we struggled to recapture that area, which actually became resistance at the time that we undercut it. On Friday, we moved significantly back above that low, which is encouraging to the bulls. We also closed at the very top of the trading range for the day. I want to take a look at the NASDAQ composite. NASDAQ on Friday was up 80.7 points, or 1.74%. We closed at 4707. Trading volume was higher than the prior day. Right now the NASDAQ is bracketed by support down here in the 4292 area and resistance up here in the 4090 range. I talked earlier about the confirmed uptrend and not being particularly confident in that uptrend. In order for me to get a little bit more confident about the current rally in the market, I would want to see the NASDAQ composite take out this level of resistance. That would give us a low, a high, a higher low, and then a higher high. That would make me feel a little bit more comfortable about this confirmed uptrend call by O'Neill. Let's see what the S&P 500's up to. On Friday, we got a follow through in the S&P 500 according to the O'Neill market timing model. The definition of a follow through day is any day 4 days into an attempted rally, which would be day 1, where we closed higher than the prior low, day 2, day 3, and yesterday was day 4. So 4 days into an attempted rally, we want to see the market advance at least 1.25%. The S&P 500 on Friday was up 27.54 points, or 1.43%, meeting that 1.25% threshold. And the final requirement is that trading volume be higher than the prior day. Friday's trading volume was higher than Thursday's trading volume, giving us a confirmed uptrend in the O'Neill timing model. Right now, the S&P 500 is trading at 1951. For you followers of William O'Neill, we are on a confirmed uptrend in the market. We have been since Friday. The S&P 500 is bracketed by support down here in the 1867 area and resistance up here in the 1993 range. Again, I don't feel particularly confident about the follow-through day on Friday. For me to become a little bit more confident, I would want to see the S&P 500 take out this level of resistance, and particularly this level right here. And again, the reason for that, the same as the NASDAQ, is we established a low. We went on to make a high. We've come down here, we've made a lower, we've come down here and made a higher low. And in order for this to confirm the uptrend in the market, we need to make a higher high, which means that we need to take out this level right here in the 2020 area. Let's take a look at some stocks that we may be interested in watching. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list, which you can view by going to the pushbuttonstocktrading.com homepage and clicking on blogs, then daily spreadsheet, and then clicking on the link. Depending on the operating system you're running, you may need to click on a dialog box to open the spreadsheet. Once the spreadsheet's open, you simply go down to the Universal Watch List tab, click on the tab, and that will bring up our Universal Watch List. To qualify for our Universal Watch List, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. Given the confirmed uptrend in the market, I want to take a look at a few stocks here. In fact, I have a rather extensive list of stocks that I want to take a look at, and so we're going to power through them pretty quickly. According to William O'Neill in his classic book, How to Make Money in Stocks, whenever we get a follow-through day, we want to take a position in a stock, an exploratory position. It doesn't have to be a big position, but we want to at least dabble back into the market. So what I want to start with is stocks that are setting up in proper bases here. And the first one is MaxLinear. MaxLinear provides RF, analog, and mixed signal ICS used in communication and video display over broadband networks. Right now the stock is in a second stage base. This is a cup and handle base with a pivot point in the $12.96 area. MaxLinear gets a 76% checklist rating and can be bought by aggressive traders here. Notice how the volume dried up right here in the handle. We got a couple of spikes of volume on up days, but for the most part the volume dried up in the handle. That's exactly the type of activity that we want to see in a cup and handle base. Traders can buy MaxLinear on a move above the $12.96 area on at least 140% of average daily volume. Again, keep in mind that our primary signal is still a sell signal, and so if you're going to take exploratory positions, make sure they're smaller positions and make sure you keep your stops at their tightest levels. Next, let's take a look at Edward Life Sciences. Edwards develops products to treat advanced cardiovascular disorders, including heart valve and peripheral vascular disease. The stock right now is in a first stage base with a pivot point of $159. We've had these two big bars in the past two trading sessions on very heavy trading volume. What we're looking for is a breakout by Edwards above 159 on heavy trading volume, and my definition of heavy trading volume, as always, is 140% of average daily volume. Edwards gets a 68% checklist rating. Next we have Palo Alto Networks. Palo Alto provides network security infrastructure products for enterprises, service providers, and government entities. The stock right now is working on this cup and handle base. This is a second stage base, and in full disclosure, I own this stock. I've owned it for about 6 months now. We're in a second stage cup and handle base we have a buy point of $179.72. Palo Alto gets a 80 checklist rating and can be bought on a break above this $189 level on at least 140% of average daily volume. I want to draw in a trend line on Palo Alto because that might give us a little bit of an early entry point. If we draw in this trend line right here, we can buy Palo Alto on a break above that trend line. Keep in mind, we are on a primary sell signal, which means that if you do buy the stock, you want to keep your stops at their high or at their tightest possible levels. Next, we have Universal Insurance. Universal offers property and casualty insurance products, including wind risk coverage for homeowners, primarily in the Florida area. Universal's working on this cup and handle base and actually broke out above the pivot point of $28.96 on Friday. Actually, it broke out earlier than that, but it retested the cup and handle and closed above it on Friday. Trading volume was a little bit weak, but the volume 2 days ago on the actual breakout day was very solid. It was above 140% of average daily. Full disclosure, the O'Neill rule is that on a follow-through day, we want to buy at least one position to establish a position back in the market. On Friday, I bought a half position in Universal, which gets a 76% checklist rating. We're in a first stage base. Universal can be bought here, keeping in mind that we are on a sell signal in the market and you want to keep your stops at their tightest possible levels. What we've been looking at primarily are stocks that are setting up in recognizable basing patterns. I know that a lot of people don't like to buy stocks as they're approaching new highs, which is what O'Neill recommends. So what I want to take a look at is some stocks that we can buy before they get to new highs. First stock I want to take a look at is Skechers USA. Skechers markets men's and women's children's casual dress and athletic footwear via department and specialty stores. The stock right now is in a very late stage base. It's in a fourth stage base, but we have this trend line right here that gives us an opportunity to get into the stock a little bit early. The pivot point on Skechers would be 163.60, and Skechers gets a 68% checklist rating. You can buy Skechers on a break above this trend line, but I wouldn't want to buy Skechers on a break above the trend line unless it broke back above the 50-day moving average, which we show here in red. Next, we have LendingTree. LendingTree provides online lending services through lendingtree.com. LendingTree has been setting up this trend line base. I'd feel comfortable getting into LendingTree on a break above that trend line as long as the stock was trading above its 50-day moving average, which again is this line that we show in red. Next, we have a little bit more aggressive trend line. We're looking at LG Homes, which builds entry-level single-family homes in high-growth markets in Texas, Arizona, Florida, and Georgia. LG has this little trend line right here. A break above that trend line would provide a good entry point for LG Homes, which recently broke out of a first stage base back in this area right here. Dave & Buster's operates 70 restaurants in 27 states in Canada, with plans to open 7 to 8 more units in fiscal 2015. The stock is working on this trend line right here. Again, it's a very aggressive trend line, but we've had huge spikes of volume in Dave & Buster's. Dave & Buster's is a relatively recent initial public offering. It came public about a year ago and is a more aggressive situation than some of the stocks that we've taken a look at. Dave & Buster's can be bought on a break above that trend line, keeping in mind again that our primary signal is a sell signal, and so you want to keep your stops at their tightest possible levels. Next, we look at Inphi. Inphi Corp designs analog multiplexers, encoders, amplifiers, and memory buffers for servers, routers, and storage equipment. The stock right now is in a third stage base. That's a pretty late stage base, so we might want to be a little bit cautious here. We have a pivot point of $27.11. Infi gets a 76% checklist rating, and we have this trend line. The reason that we'd be interested in a third stage basis is this trend line gives us the opportunity to get into the stock a little bit earlier than we normally would. We can buy Infi on a break above that trend line, keeping in mind that we are on a primary sell signal and that we want to keep our stops at their tightest levels. Finally, let's take a look at FCB Financial Holdings. FCB is a holding company for Florida Community Bank operating via 52 branches in Florida. The stock is working on this trend line right here. Again, it's trading below its 50-day moving average. We could buy the stock on a break above that trend line, keeping in mind that we want to buy above the 50-day moving average. So we want to buy on a break above whichever is higher, the 50-day moving average or the trend line. Those are my list of stocks that you may be interested in taking a position in as we go into the confirmed uptrend here. Keep in mind we're on a sell signal on our primary timing model, which means that we want to keep our stops at their tightest levels if in fact we do get into some positions here. And I do recommend that you take an exploratory position because the O'Neill timing model has gone to a buy. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.